Then we have the next thing is another automotive company, GM. So GM actually hit an all-time high around $51 a share. And remember, this is a company that got bailouts after the financial crisis in 2008, and then they still managed to go bankrupt. But anyway, they came back in November 2017, in November 17th of 2010. General Motors had their IPO. They raised $20 billion at $33 a share, right? Well, if you look at the stock price now, that's about a 54% increase, but in a decade, over 10 years. That's about a 5.4% return each year, which is well below the stock market average. And also, what you could get on some corporate bonds. I mean, it's not a good return at all. Now, keep in mind that the government gave this company $51 billion back in 2009 in the auto bailouts. So the whole company right now is only worth $70 billion or so. So after a decade, was that really effective use of taxpayer money to get another $20 billion in market cap here, only like 5 or 6% growth per year? That's not that great, and maybe that money would have been better spent elsewhere. Speaking of money floating around, we have our fearless leaders announcing another major COVID stimulus relief plan, $1.9 trillion, which you can't even fathom because it's just unbelievable amounts of money. So they want to send individual checks of $1,400 to everybody, because why not? And they want to increase the minimum wage to $15 an hour. So this is pretty crazy because the federal minimum wage right now is $7.25. This new stimulus deal is going to double that to $15 an hour. Now you have to think of it as this is the salary. This is like the salary for individuals, but it is the cost of labor for businesses. Now, how many businesses like restaurants and retail outlets are closing already because of this pandemic and the lockdowns and having trouble? I mean, how many of them can afford a literally doubling in the increase of some of their workers there? That's pretty crazy there, and we're going to see how this is going to play out in the end. You could do a whole nother video on the impact of the minimum wage, but from an economic perspective, it could hurt the people the most that it wants to actually help. Next up, we have Poshmark Inc. So they had their IPO and the stock surged 140% during the first few minutes of trading. They closed the week at $83.20 a share, which is almost double from the IPO price of $42 a share. Now, this is a company that basically sells secondhand clothing and fashion accessories online, like handbags and necklaces and stuff like that. They have 31.7 million active users on the site, and they want to give people a shopping experience. They want it to be like Instagram, where people stay on the platform for a significant amount of time. They also have an option to authenticate valuable items that are, $500 or more. They have a process for that, so you're buying a legitimate handbag or other merchandise. And this one's a little bit different than other IPOs that we've seen recently because they're actually profitable. They had, after 10 years of existence, they finally reported a positive quarter ending June 30th, 2020, right before the IPO here. So in 2019, the company was valued at $1.25 billion. Now it is worth $6 billion. They had revenue of $192.8 million, which was up over 26% from the previous year there. So once again, we're seeing a red-hot IPO market in 2021, same as 2020. Another one that came out, Petco, ticker symbol WOOF. They had their IPO at $18 a share and then closed at $29.40 a share. Poshmark priced at $42, right? And then they closed at $101 on their first day of trading and later sold off a bit there. Then Affirm, they started at $49 a share and the stock ended up closing on the first day at $114. So a lot of these stocks doubling on their first day after the IPO here. Then we have to go a bit more into the inflation outlook. So Eurozone inflation, there's some interesting information here. There's this thing called the 5-year forward inflation swap rate, which is used in Europe. And it is basically showing the inflation expectations for price increases over the next 5 years. So this measure jumped about 1.35% Tuesday, which is the highest in over a year. This is the first time it's jumped above that mark. So the yield difference also in Germany's bonds, the 10-year bonds, and the price level linked bond, which keeps track more with the inflation, It went up above 1% for the first time since February 2020. In Italy, the same bond difference hit a 2-year high. So you're seeing differences in the inflation-protected bonds versus the regular bonds. There's more of a gap there, means that people are expecting more inflation on the horizon. So countries around the world are trillions of dollars are being printed and being put into the economies through stimulation here of every kind of means possible. So what is going to happen with this? Is it going to be like the past 10 years where you only have inflation in financial assets? Or is it going to be something different where inflation goes into the general consumer economy and everything you want starts going up in price? I mean, even looking at the US Treasury 30 yield, that went up about 0.25% in just what's happened so far in 2021. It's up to 1.863%. Which is a significant increase just in the beginning of a year. Looking at some of the jobs data, we had pretty good jobs numbers coming out since May 2020 and the end of the pandemic, or the end of the worst of the pandemic, I should say, right? So we were adding jobs every month, actually for 7 straight months of job expansion. That's pretty significant there. But then December came around and we lost 140,000 jobs. So that was pretty bad, and it ended that streak of, positive job growth there. Then you had also the Federal Reserve Chairman, Jerome Powell. He came out and he did this interview over Zoom, and they were basically talking about some of the things such as inflation, right? He said that the target for the Federal Reserve is still a 2% inflation rate, but they may see inflation over 2% for the first time in a while. So there's just an interesting note here how they are also kind of saying things that they're going to fix inequality. The Federal Reserve they're not able to do anything to fix inequality, right? When they print money, if anything, that makes the rich people richer and the poor people poorer, because the rich people can afford to get the assets, which will increase in value, the hard assets, whereas the individuals that are making a salary, their purchasing power is wiped out. So it's pretty interesting what they're saying there. Then we have Playtika, P-L-T-K. I don't know if I'm saying that right, but they soared about 30% during their first hour of trading after their IPO on Friday. The stock opened at $33.40, 23% bump from its IPO price of $27 a share. So they raised about $1.88 billion in this IPO. It's an Israeli-based company, and they basically have revenue of $1.8 billion and net income of $16 million in the last 9 months. So looking at this company was founded back in 2010, and the idea was that they can make all these successful kind of mobile platform video game type of things, and they got acquired by Caesars Interactive Entertainment in 2011. Then in 2016, Chinese investors took over this company because you know how China loves the mobile gaming market. Then we have an IPO set up for Bumble. They announced that they're going to be doing an IPO, but they didn't discuss the number of shares in the SEC filing or the pricing. So last year, the company was estimated to be worth $8 billion. Now, Bumble's like one of the dating apps like Match and Tinder and those ones that you can easily access on your phone. There's a lot of competition. Bumble swung to a net loss of $116.7 million for the first 9 months of 2020 versus a profit of $68.6 million in the year earlier period. They generated about $416 million of revenue in the 9 months, compared with $362.6 million a year earlier. A lot of that does have to revolve around the pandemic. So it is registered, $488.9 million of revenue in 2019. So they're up like 30-something% from 2018. So they were on a good trajectory until the pandemic hit them. In their prospectus, they say that we purpose-built the Bumble app with features designed to empower women, giving them control in relationships. So the idea here is that on Bumble, only women can initiate the conversation, and it helps prevent them from getting harassed as much as they do on other apps and giving more of the control to them. Next up, we have the vaccine from Sinovac. It's like the CoronaVac vaccine. That was the one that China came up with. And we're actually seeing it being deployed in Brazil. But the problem is that when they were looking at the efficacy in Brazil, it seems to only be about 50% effective. So that's pretty bad there. It still meets the World Health Organization guidelines, but would you want to take a vaccine that's only 15% effective when the ones in the US are 90%? Next up, we have Boeing. So Boeing has some more bad news. Airbus, they were crowned the #1 aircraft producer in 2020. This is based on the amount of deliveries in the given year. So Boeing had always been the reigning champion until recently. Now this is 2 years that Airbus has topped Boeing. Boeing's business is down 90% from the peak in 2018. Remember, they had to ground all of their flights with that whole software issue where there was planes crashing. Nobody wanted to buy their airplanes. The company only had 84 passenger jets delivered to airline customers in 2020. Now, looking back at 2018, when they had their highest point ever, they had 806, and now they had 84. So you can see how much that company is hurting now and why Airbus has taken the lead there. Next up, we have liquefied natural gas. This is another commodity here that has an interesting story. There's been this crazy cold snap out in Asia there. I think Beijing's had said a recorded temperature of -3 degrees, which is the lowest in 50 years. So they need a lot of more natural gas to heat their homes. Now the price of LNG reached 28.221 per million British thermal units. Now that is up 87% from the lows when the pandemic started. So you can see this is a really significant increase in the price, especially just recently. And I was thinking, are there any companies that even are involved with this? Like maybe Cheniere stock, that's the LNG stock, is up from $60 to about $66 in the past month. So they're doing all right, but maybe there's a better way to play it. Then next up, we have these big, actually the world's largest financial asset management company, Blackrock. So this one, which is recently trading at $727.26 a share, they now have $8.68 trillion in assets under management. That's like, that could be a country in of itself. BlackRock had quarterly earnings that had profit increase 19%. They earned $1.5 billion in the fourth quarter, or $10.02 a share, up from $1.3 billion or $8.29 a share a year earlier. Revenue was also up 13% to $4.5 billion. That is what, like a 28% profit margin? So they had a really good quarter here. You're still seeing these asset management companies really dominating. And on top of that, to end it off here, we also had JP Morgan and Citibank. They came out with their earnings and they did really well. Citibank also is taking some of those loan loss reserves and putting them back into action now as the pandemic and the vaccines are coming out. So I thought that was really interesting thing there that you saw the banks are kind of changing their form from being very scared to now making a lot of money and getting rid of some of their loan, their loan loss prevention items and putting that to work instead. So anyway, if you want to see information next week, check out Spark Finance once again, and I'll be bringing you the business news of the weeks going by. I guess I'm out now.